Hello viewers, welcome to my channel. I'm Hashim Ali Khan. So already 27 problems we have completed till the last video. Now in this video I'm starting from 28. So this will be the last and final video on short questions and MCQs on other receivables and other payables. The first two videos I have given the complete explanation of other receivables and other payables. What are the items that may come under the head other receivables, other payables, where it will be shown. All these things I've explained in the first two theory videos. My regular viewers have already might have watched all the videos, got a good command on other receivables and other payables. How the adjustments will be done in financial statements. Everything I have explained. So if you have not watched the earlier videos, please go to the theory video first. Watch the first two videos. Be acquainted with the concept, then only you can understand the remaining part. So before starting this problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So always keep the problem sheet ready before watching the video. Now take a screenshot of the solutions of all the questions from 28th. Then I'll explain all the points in detail. Come on. Now I'm starting problem number 28. See the problem carefully. An item cost $128. It is slightly damaged and can only be sold for $120. Actually, the business has purchased the item. The cost of the item is $128. But due to some damage, it can be sold only at $120. The salesman commission is payable at 15%. At which value is the item included in inventory in the financial statements? So this item of inventory, at which value it will be included in the financial statements? The four options are given: A, $102, B, $110, C, $120, D, $128. Now one point you have to remember, according to the accounting concept prudence accounting concept says the inventory should be valued at the lower of cost or net realizable value, whichever is less. The cost or net realizable value, whichever is less, should be taken as the value of inventory in the financial statements. Here in our problem, the cost is given. The cost of the item is given as 128. That is given. Now we have to find out what is the realizable value. The selling price of the item is $120 because it was damaged. The item was damaged, so it can be sold only at $120. But for selling this item, we need to pay salesman commission. And commission will be 15% of the sale price. The sale price is 120. 120 into 15 by 100, you will get 18. So 18 is the salesman commission. 120 into 15 by 100. $18. So deduct, salesman commission will be deducted. So 120 minus 18, 102 is the net realizable value or market value. Net realizable value. So what is the cost of the item? $128. What is the net realizable value? $102. Whichever is lower should be taken as the value of inventory in the financial statements. So whichever is lower, 128 or 102? So 102 is lower. Therefore, the inventory should be valued in financial statements at $102 as it is lower. So correct answer is A, $102. That's it. This is the end of problem number 28. Now 29 problem. Anne's statement of financial position includes the following. Anne is the sole trader. Her financial statements disclosed three items. Now in these three items, which item or items are included in other payables? Other payable will come under current liability. Now simply you decide which items will come under current liability that is other payable. The item which is a current liability is a other payable. So it is asking you what are the items which will be taken in other payables. 3 items are given. The first item is an amount. See, an amount paid by Anne for a service which has not yet been received. An amount which is paid by Anne for a service which is not yet been received. That means this amount is paid in advance. Anne has paid an amount in advance. When an amount is paid in advance, it's an asset. It is not a liability. The first item given is an asset. It is not a liability. So this item will not come in our answer. The question it is asking you, what are the items that will come under other payable? Other payable means current liability. The first item is a current asset. An amount paid by Anne for a service which has not yet been received. That means amount paid in advance. It's a current asset. This is not our answer. Second point, an amount received by Anne for a service which Anne has not yet been provided. An amount has been received by Anne for a service which Anne has not yet provided. That means it is an income received in advance. This income is received in advance. So it is other payable. So this item will come. Second item will come. It's a liability. An income which is received in advance. Now third point is the value of a service received by Anne for which payment has not yet been made. The service is given. The value of a service received by Anne, not given, received. The value of a service which is received by Anne for which payment has not been made. That means it is owing. Amount is owing by the business to the supplier. It's a liability. So out of the 3 items, the second and third point are the other payable, are liability. The first point is asset. The correct answer is C. That is 2 and 3. The second item is an amount received by Anne for a service which is not yet provided. That's a liability. Similarly, the value of service received by Anne, but Anne has not paid the amount. That is also a liability. So 2 and 3. That's it. Now 30th, problem number 30. See carefully. Insurance prepaid $120 was treated as an accrual in the income statement. Which effect did this have on the profit for the year? Actually, prepaid, insurance prepaid will be deducted. So from insurance paid, $120 should have been deducted because it is prepaid. But the accountant has made a mistake. Instead of prepayment, it has treated as accrual, accrued, due. So accrual will be added, prepaid should be deducted. So actually it is a prepaid insurance $120. It should have been deducted. But by mistake, it is not deducted. It is added to insurance. When it is added to insurance, the insurance amount will increase. When insurance amount increases, expenses increases, profit will get decreased. The effect will be, profit will be understated. By how much amount? 2 mistakes are there. The first mistake is $120 should have been deducted, but it is not deducted. Second mistake is $120 were added as owing. So 2 mistakes. 120 prepayment not deducted. Second, by mistake owing added. So totally 120 plus 120, 240. The profit will be understated by 240 by taking the prepayment as wrongly as accrual, as accrued. That's it. So 120 understated by 240. 120 plus 120. Next one is 31. Problem number 31. Garrick owns a warehouse in Beijing. At the moment, he only uses 60% of the building. This Garrick is the sole trader. He is having a building to run his business, but 60% of the building he uses. Remaining 40% of the building is idle. So why to keep idle? We can let out on rent to a tenant. He rents the other part of the building to Elsa. Elsa is the tenant and charges her RMB 68,000 per annum. So per annum the rent receivable is 68,000. At the end of the financial year end, Elsa has paid RMB 62,000 towards rent. That means out of 62,000, the tenant has paid only 62,000. So how much is still receivable? 6,000 rent is still receivable. Now what is the question? State the amount that should be entered in Garrick's income statement. How much rental income should be taken in income statement? First question. Second question, state the amount that should be taken in Garrick's statement of financial position. So how much rent should be taken in income statement? How much rent should be taken in statement of financial position? So according to accrual concept, the total rent, whether received or not, complete rental income should be taken in income statement. So at what rental value it is let out? 68,000. So completely 68,000 should be taken in income statement. Complete 68,000. But how much is received? 62,000. So out of 68, only 62 is received. Remaining 6,000, that is income receivable, that will be taken in statement of financial position. The ultimate answer, 68,000 should be taken in income statement and 6,000 should be taken in statement of financial position as other receivable. That's it. So here the answer is the total income of rent $68,000 should be entered in income statement. The rent not yet received $6,000 should be entered in other receivable in the statement of financial position. Just now I've discussed. That's it. This is the 31. Now 32. Problem number 32. Business A pays $450 for electricity during the accounting period. During the current year, $450 are paid for electricity. However, the business has used $600 of electricity. The actual electricity consumed during the year is $600. But amount paid for electricity is only $450. Explain the treatment in income statement and statement of financial position. According to accrual concept, the electricity consumed, the total value of electricity consumed should be taken in income statement. So how much electricity is consumed? $600. So $600 value of electricity consumed should be taken in income statement. Out of 600, how much is not paid? $150. 600 minus 450, because 450 is already paid. So 600 minus 450, $150 is still payable. So it will be taken in statement of financial position as other payable. So other payable $150. That's it. So here answer is the actual electricity used during the accounting year $600 should be taken as expense in the income statement. The expenses owing for electricity, that is $150, should be taken as other payable under current liability in the statement of financial position. That's it. So this is the end of 32. Now 33. On 1st January 2005, a trader owes $200 for electricity in respect of 2004. That means during 2004, electricity bill was not paid. How much it is due? $200 was due. So at the beginning of the current year 2005, electricity owing is $200. She pays $5,000 for electricity during the year. And on 31st December 2005, end of the year, she owes $600 for electricity. So at the end of the current year, still amount payable for electricity is $600. How much will be shown for electricity in the income statement for the year ended 31st December 2005? It is by mistake, it is given 2055. It is 2005, 2005. Now options are given: A, $4,200, $4,200, B, $4,600, C, $5,400, and D, $5,800. So out of the four options, the correct answer is $5,400. So you can see C, $5,400. This is the electricity to be taken as expense in income statement for current year 2005. So how we got this 5,400? Here I have given the complete calculations. Amount paid for electricity during the current year. During the current year, $5,000 electricity bill was paid. Now from this, deduct the electricity owing at the beginning of the year. At the beginning of the year, $200 were owing for the last year, 2004. So this $200 does not belong to current year. It is of the last year, 2004. So deduct. So 5,000 minus 200, 4,800. At the end of the current financial year, electricity bill owing still to be paid is $600. It is given owing for electricity at the end of the year 31st/12/2005 is $600. So add up $600. 4,800 plus 600, 5,400. So 5,400 is the expense for electricity to be taken to income statement for the year ended 31st December 2005. Current year ends on 31st December 2005. For this year, electricity amount to be taken as expense in income statement is 5,400. C bit is the right answer. So what you have to remember? Outstanding expense beginning of the year should be deducted and outstanding expenses end of the year should be added. Right? That's all. Now 34th problem. A business paid $1,800 for insurance in 2005. Current year 2005, insurance paid is $1,800. A prepayment of $150 had been brought forward from 2004. So there is a prepayment, payment made in advance in last year itself. So this prepayment of $150 was made in last year itself. For which year? For current year. For current year 2005. How much is charged to income statement in 2005? How much electricity should be taken as expense in the year 2005? So how much is paid? 1,800 is the insurance paid during the current year. Apart from that, how much is paid for the current year in the last year itself? So last year it was paid 150. So we add up 1,800 paid during the current year and 150 paid in the last year itself for current year. So for current year it was paid in the last year. So we add up. So answer is 1,950. C answer $1,950. How we got 1,950? Amount paid for insurance in the year 2005. Current year it was paid 1,800. Add prepayment brought forward from 2004. The amount of 2005 was paid in 2004 itself. Prepayment, advance payment, that will be added. So 1,950. This is the insurance expense to be taken under expenses in income statement for the year 2005. That's it. So this is the end of problem number 34. So far we have completed 34 problems. Now here I have written the 35, 36, 37, 3 more problems. This will be the end of all the short questions and MCQs. So before explaining the last 3 problems, take a screenshot of the solutions of these 3 problems, then I explain all the points. Come on, see the 35, problem number 35. Amount owed by a trader for electricity are given below. Amount owing, outstanding at the beginning of the year 2000, 1st January, 31st December, end of the year owing for electricity is 2500. So owing for electricity beginning of the year 2000, end of the year 2500. The charge for electricity shown in the income statement for the year ended 31st December 2005 was $15,500. So 15,500 is the charge for electricity taken in the income statement. What was the amount paid for electricity during the year? How much amount for electricity paid during the year? Four options are given. A, $15,000, B, $15,500, C, $16,000, and D, $20,000. So first of all, the answer is A, $15,000. A is the answer, $15,000. How we got this 15,000? I am going to give the explanation. How much is the amount charged to income statement for electricity? The charge for electricity shown in income statement is $15,500. To this, we have to make the adjustment for two items. Owing for electricity beginning of the year and owing for electricity end of the year. When beginning of the year owing for electricity will be paid during the current year. Whatever outstanding was there in the beginning of the year that is paid during the year, that will be added. So owing for electricity at the beginning of the year will be added. Here, owing for electricity at the beginning of the year, 1st Jan, this will be added. And owing for electricity at the end of the year, that will be deducted because it is not paid. Outstanding electricity at the end of the year that is not paid, that's why we deduct. So here, minus owing for electricity at the end of the year. How much end of the year? 2,500. So from 15,500 deduct 2,500, 13,000. To 13,000 add electricity owing at the beginning of the year 2000. Beginning of the year 2000. So add up, you will get 15,000. So 15,000 is the amount paid for electricity during the year. That's it. So simply you have to remember which item to be added and which item to be deducted. End of the year outstanding not paid, so deduct. Outstanding at the beginning of the year that will be paid during the current year, that will be added. That's it. So this is the end of 35. Now 36th problem. The financial year of Peter ends on 30th September. On 1st August 2020, Peter received rent $1,000. This covered the period from 1st July to 30th November. So how many months? July, August, September, October, November. So totally 5 months. For 5 months, the rent received is 1,000. So accounts are closed every year on 30th September. So how many months are going after 30th September? September ke baad next one October and November. So 2 months are falling in the next year. We are closing the accounts on 30th September. But this rent is covering up to 30th November. Which entry will be made in Peter's statement of financial position on 30th September? That means statement of financial position will take only prepayment. That means payment in advance. So how many payment in advance? 2 months. So 1,000 into 2 by 5. Here you can see. C answer. It's a current liability 400. So 4 options are given. A, current asset 400. B, current asset 500. C, current liability 400. Current liability 500. So first of all, you decide whether it is a current asset or current liability. It's a current liability because it's an income received in advance. When income is received in advance, it is called a current liability. The rent is received in advance. Financial year ends on 30th September 2020. Rent received $1,000 for 5 months from 1st July 2020 to 30th November 2020. So 5 months rent is 1,000. So how many months are falling in the next year? 2 months. Because we are closing the accounts on 30th September. And we got the rent up to 30th November. So after September, October, November, 2 months rent we have received in advance. So how much is 2 months rent? 2 months are falling in the next year, that is October and November. Rent for 2 months, 1000 into 2 by 5, it comes to 400. The first point we got is $400 is the rent received in advance, right? When the rent is received in advance, it's a liability because we have received in advance, other payable. So rent received in advance, $400 will be taken as other payable under current liability. So ultimate answer is current liability $400. That is the explanation about this problem. The last and final question, 37th. See here, Haley's financial year ends on 30th September 2020. She provided the following information. On 1st October 2019, beginning of the year, rent receivable accrued. So rent receivable due is 480. During the year ended 30th September 2020, rent received 68,000. On 30th September 2020, end of the year, rent received in advance for the next year is 720. Which journal entry will be made on 30th September 2020? So 3 journal entries are given A, B, C, D. A, income statement debit, rent receivable credit, 5,600. Second, income statement debit, rent receivable credit, 6,560. C, rent receivable debit, income statement credit, 5,600. D, rent receivable debit, income statement credit, 6,560. The answer is C. C is the answer. Rent receivable account debit 5,600, income statement credit 5,600. Now how we got this 5,600? So here are the calculations. Rent received during the year is 6,800 given in the problem. Now to this we adjust the rent. Rent receivable accrued in the beginning of the year 1/10/2019, 1st October 2019, rent receivable. So current year it is received. So deduct. Because this is not the rent of current year. It is the rent of the last year. That's why we deduct 480. So deduct 480 is 6,320. At the end of the year, some rent is received in advance for the next year. That will also be deducted. Rent received in advance on 30th September 2020, end of the year, 720. Because this is the rent for the next year, not current year. So deduct. So 5,600 is the rent chargeable to income statement. The entry will be rent receivable account debit, income statement account credit, 5,600. That's all. So I have completed all the short questions, 37 short questions and MCQs. I have explained all the points. Watch the video not once, twice, thrice. Then only you can be able to understand the concept of other receivable and other payable. So if you are satisfied with my lecture, give a like to the video. Share my channel in your group, in your friend circle, so that more students can watch the video and enhance the knowledge. Subscribe my channel if you have not yet subscribed. And lastly, give your comment whether you can be able to understand or suggestions you can give in the comments. Inshallah, the main problem will continue in the next video.